Rick Santelli standing by at the CME in Chicago with those GDP numbers. Hello, Rick.
Good morning. Yes, not only do we have GDP, we have the trade balance, which is a deficit, of course. GDP, it's our second time around the block. We're looking for 2.4 confirmation. We lose 0.3, Mike. 2.1. That's a pretty decent revision, but then again, we all remember 2.4 was much greater than we expected the first time around. If you look at consumption, 1.7. Our last look was 1.6, so we lose 1/10 there. We were expecting it to increase by 1/10. Now, the pricing indexes, maybe the most important aspect, and if we look at just the GDP price index headline, 2%. The high watermark there was 9% Q2 of 22. That went back to 1981. And what's interesting about 2%, of course, is that we continue to move lower. 2% actually is the lowest level since the second quarter of 2020 when it was minus 1.3. Now, if we look at core price index, 3.7, and that is 1/10 less than our last look. And by the way, that price index, our last look was 2.2, so it dropped 0.2. So 3.7, the high water mark there was 6% in Q2 of 21. That went back to 1983. Let's take care of some other business here as we monitor the effects in the market. We see that we moved from around a 414 to a 411, and we see that the pre-opening equity markets have definitely moved higher, almost double their pre-opening when we were up about 20, a little over 20, as Mike pointed out, in Dow futures. So we could see that the pricing index moving down really has an effect still. The trade balance is a deficit at minus 91.2 billion, minus 91.2 billion. That's the biggest deficit going back to April of this year. Wholesale inventories down 1/10. That's a little less than expected. And finally, retail inventories, that's a July number, up 0.3, about half of what we expected and about half of what's in the rearview mirror, which was up 0.7. We're going to continue to monitor, of course, post-ADP jobs, because we all know at the end of the week we have the big jobs report, and maybe nothing could be more important after that very weak jolt yesterday. Pricing keeps moving down, and I guess the best way to summarize this is the core PCE quarter over quarter at 3.7 is finally getting down into a territory that is close to half of that high watermark, and we see the degenerate price index at 2% is really quite stellar considering it started out at 9% not that long ago, Q2 of 22. So what, a year ago? Finally, we want to monitor how all of this is going to figure into the growing supply as interest rates continue to be firm, but we're about 12 basis points down from a very key technical level in 10s. Pay very close attention to 4.25.